Hi, if there's something that has brought confusion in these streets of investing is book closure date and dividend. I don't know, why are you people getting confused? So what is book closure? Book closure is a period when a company temporarily closes its shareholders register to determine who qualifies for the benefit of dividend. So like now if you look at equity, their book closure was last week on Friday. If you look at the share price today, sorry, I'm doing this when the market is closed, their share price was trading at around 70.69, and as at Friday it was 75. What does that mean? After book closure the price go down, and it's very normal for the prices to go down after book closure. Mliona even the other day for BAT after book closure from 570 to 510. This equity from 70 to 75. Bank of Kigali, also the big KG, it also went down after the book closure. And this is very normal. Why does the share price dip after book closure? Because the benefit which was there, the benefit which was dividend, has already left the counter. Anybody who is buying equity today that is 25th May, will not be paid dividend. But if you bought equity last week, assume you bought on 21st, because I don't advise people to buy on that book closure date. Assume you bought on 20th or 21st, you qualify for dividends. But if you buy today, which is 2 days later, you don't qualify for dividend. And immediately that benefit leaves the counter, the price drop. Then the other thing which makes the price to drop, kuna wale watu who had bought specifically equity for dividends or Bank of Kigali for dividends. Immediately their names appear on the register. They sell the share. Like now, I'm sure today there are some people who are selling equity because their name are already in the register of equity. They will qualify for the 5.75 shillings of dividend. That's why the share price go down immediately after book closure. And for you as an investor, this is not time to panic that the share price go down. It's expected and it's very normal. The other question that I was asked, if I buy equity on 20th and book closure is on 22nd, do I qualify for the 5.75 Kenya shillings dividend, or do they do pro rata? There is no pro rata in dividends. You qualify for the full dividend. You bought equity on 20th May, you'll get your full dividend of 5.75, when everybody else, even mwenye alinunua equity last year, atapewa hiyo 5.75. Hakunanga pro rata basis in dividends, provided your name is at the book closure date. And instead of you panicking like this few of mine here, panicking that the price is going down, BKG or the Bank of Kigali, it's one of the best in financial institutions in Rwanda. So you should be asking yourself, are you investing in Bank of Kigali for long term or for short term? If you are a dividend investor, and I usually tell you people, go there for long term basis. Ask yourself, were you investing for dividends or were you investing for short term? As in, are you looking for capital gains? And most likely, if you're doing for dividends, it's long term. You want to enjoy future dividends from this Bank of Kigali this year, next year, and many years to come. Ask yourself the other question, is the company still fundamentally strong? If the company is still strong, I've told you Kigali, Bank of Kigali, BKG, is one of the best financial institutions in Rwanda. So the company is still strong. Why should you panic? What you should do when the book closure happens, or when the price start going down, that like it's going down here, average down. No need to panic. You bought at 55.25, it's gone down to 45 or 46 there. average down so that you bring your price of 55 maybe to around 50. You average down. If it continues going down, average down. And it's for any company which is fundamentally strong and you bought it for dividend. BAT ikienda 510, nunua. Ikienda 400, nunua. Looking at the future dividend. Because if you panic sell, you'll sell at a loss. You bought at 55 and you come here and sell at 46. Na pengine ile dividend utalipwa will not cover for that loss. So panic selling, it's a no. Average down and bring your entry price down. So and then the other question that somebody was saying, what happens if I sell the share before book closure? Yeah, if your strategy is capital gains, maybe you bought equity when it was at 69 and then before book closure is 75. If your strategy is capital gains, you can sell it and get the capital gain. But if your strategy is dividend, you bought equity to enjoy the dividend of 5.75, you do not sell. Because if you sell before book closure, you're not going to get even a single dividend. Assume like now you sold equity. If you sold equity on 20th May and the book closure was 22nd, you're not going to get a single dividend. Yes, you just enjoy the capital gains. So you need to ask yourself before you make that decision of selling the share before book closure. Ask yourself, do you need the cash now or can you continue holding and benefit from future growth and dividends later? Those are the questions that you are supposed to ask yourself. So this thing about book closure, let it not confuse you. Yes, and about dividends. Thank you.